Indrajit Bhatia, Associate Director at Macquarie Securities, is with us to talk about the infra space, L&T in particular. Indrajit, great having you with us. Let's get straight to the point here. Numbers have been okay, the stocks moved up. To what extent do you see further momentum in the stock before we come to valuations and other key arguments here?
I think L&T's kind of Q2 numbers help recede some of the concerns on the company's ability to meet its FY14 guidance. So I would say there would be some increase or improvement in confidence levels that revenues can be met or come closer to 15% guidance number. But according to us, the margins were the real star of the Q2 numbers. Given the way their infrastructure margins or underlying E&C margins have come through, that's significantly positive. And we're still looking at reasonable and handsome gains coming out of the stock over the next 12 months or so as the confidence improves in the execution for FY14 and 15, and some of the other key triggers like asset monetization comes through.
Based on whatever data you can gather, do you see this as the beginning of a revival period for L&T in terms of earnings, in terms of capex and various other factors?
Absolutely. Given that we are now entering into a very favorable base effect, because last year Q3 onwards actually domestic revenue started to decline. So that would ideally mean that execution would only get better. Moreover, they have number of large projects which have been won early in the year, which should kind of complete their 6-month design engineering period and should enter into execution towards late Q4 or into FY15. So hopefully execution should only get better from here on.
But how would you look at the second half of this year, election year? We are approaching the election period. Usually there seems to be some cutback in spending. So do you think we could see a tough H2 ahead for the company?
Now, obviously election is going to be a critical period for L&T because the government, entire bureaucracy and machinery tends to kind of slow down and defocus from other activities. But our sense is that by the end of Q3 itself, L&T would have mustered a decent amount of order inflow to kind of meet its this year target of closer to 20% order inflow growth.
But do you think there is a scope to revise the order inflow guidance upwards?
I'm not sure whether there is going to be any meaningful upside risk to that 20% numbers unless some of the very large ticket orders, things like NTPC orders or some of these metro orders in overseas get decided, and that too favorably for L&T. But I would say the chances of they beating that 20% number is kind of remote. But I think they should be able to comfortably get near to that 20% order inflow guidance.
But you compare L&T's valuation, you look at the GDP growth trend. We have seen in the past some correlation between the two. If the GDP growth doesn't really pick up, to what extent can L&T just singularly keep on moving?
The way we approach L&T on that front is one, on our numbers, valuations also kind of trading significantly below its historical averages. And it is also trading at a discount to the market multiples. The second point to look out is that L&T has actually used the current weakness in GDP growth rate and the environment to its advantage by gaining a lot of market share in India and making I would say a decent presence felt in overseas, especially Middle East. So I think they've been lesser impacted by the slowdown in GDP compared to some of their peers have been. So obviously, as the GDP kind of trends to kind of pick up, L&T would be one of the key beneficiaries from here on.
What about you? Have you upgraded the sales EPS forecast for the company ahead?
I think there are definitely chances of upgrades for consensus because the numbers are still some distance away from the company guidance is. So we do expect the numbers through the year or remaining part of the year to kind of inch up closer to the company guidance, and I think that that should happen after Q3 numbers further.
But what about the international business and the rising contribution of the international business to the total order book? Is that a cause for concern, particularly on margins?
I think that is a well-known factor, and if I look at Q2 numbers, I think that was a very interesting takeaway, that exports have already touched close to 25% of the revenues, yet the margins kind of held up pretty well. So I think that's a very good sign that L&T will not see too much stress because the overseas order inflow has kind of gone up. Overseas order backlog is still 15% of the contribution. So I don't think the revenue contribution would move significantly from the current 25% levels.
Indrajit, of late we tend to focus more on the guidance, on the order inflow number for L&T. But do you think going on from here as recovery starts to pick up, the focus would more be on operational numbers, less on guidance?
I think given where the orders have been coming through and where even the quarter 3 orders are lined up, that is lesser of a concern. So obviously the market is going to focus on execution and margins, and I would say maybe another quarter of very strong domestic growth rate is what we need, is the focus from execution to kind of go away at this point of time.
But would you extrapolate this growth from others as well, particularly Crompton, BHEL? Do you think there could be case for any outperformance this quarter?
And I think both BHEL and Crompton have their own set of problems. BHEL is facing issues with severe underutilization of their capacity or significant decline in order inflows. Crompton has a different set of problems in terms of their overseas entities not doing well for them. So you can't draw too much of parallel from L&T numbers onto BHEL and Crompton. So I think we'll judge these numbers or these companies as and when they report their Q2 numbers.
Any sign of pickup, particularly in the power space? Some of those stocks actually have been buzzing for quite a while. Anything which has changed fundamentally?
I think on the power names, the government's efforts to kind of unlock the coal issue by getting more FSAs signed, that seem to be moving in the right direction. However, the CRC effort to get some kind of a renegotiation on tariff done, that is kind of moving 2 steps forward, 1 step backward kind of a scenario. So now we are kind of at the last phase where state governments have to ratify those suggestions and recommendations. If that happens, obviously that should be another positive trigger for the space. But obviously the kind of dismay we had and kind of pessimism we had on the power names say a year back, that has started to recede a little bit there.
Coming back to the earlier discussion, Indrajit, overall capex cycle has not picked up, investment activity has not picked up. In the backdrop of that not really picking up, to what extent do you see this momentum continuing? Would you be concerned about valuations?
I think investment cycle is not going to turn around in a V-shaped manner anytime soon. What we would actually see is the PSU-led capex, especially from the government side, that's starting to get better. Hopefully some of the PSUs from the space like coal and oil and gas, that ordering starts to pick up. Private sector capex, I think, is still at least a year away before it starts to show any meaningful signs of recovery. So it's going to be a gradual uptick, but I think anyways market starts to kind of build in 6 months in advance. As the numbers start to suggest that we are close to bottom, they stop worsening from these levels, the stocks will start to kind of move up. Election results are also very critical in terms of how the multiples of these capital good names kind of play out over the next 12 to 6 months or so.
Indrajit, apart from L&T, any other topics in the capital goods, infra, power space?
I think some of the key names we like in the capital goods are companies like L&T, Crompton Greaves. In the infrastructure space, we still like companies like Adani Port, Gujarat Pipavav Port. Utilities, we like names like NTPC, Power Grid and JSW Energy.
Right, Indrajit. Thank you so much for joining us there. That's Indrajit Bhatia at Macquarie talking about his take on the infra